Hello everyone and welcome back to the Dividend Investor. The topic of today's video is why you should start investing in dividend stocks for passive income. I did think of doing this video not so long ago, as I've been dividend investing for almost a year now, and if I'd not found out about this, I'd still be bad with money, putting money just into a savings account which gets absolutely no interest whatsoever, like 1% a year. So I thought, to get this video out to more people and get more people dividend investing and just investing full stop. This is the article which I've come across, which I'll link in the description below. But before getting to the video, if you could subscribe to the channel if you're not yet, if you're new here and haven't seen any of my content before, check out my videos as well, and give a like to this video, help boost the algorithm out and get the world of investing out to more people. So the title of this article is Investing for Passive Income, 5 Steps for Living Off Dividends Forever. And it just starts off basically a little intro saying investing for passive income, 5 steps to living off dividends forever. They are purely passive income. It's basically free money, guys. Not free money, but you're putting your money into something and you're reaping the rewards each month, every quarter, whatever companies pay dividends. It says here in the article, you do not have to spend much time managing your money or your investments. If you just do a bit of research, look at good solid dividend companies who continue to grow and pay dividends and increase them all the time. I've had a couple, like Microsoft have increased their dividends, Starbucks, AbbVie. The next part of it is living off dividends actually possible? This is the main question that a lot of people ask, is actually, can you live off a dividend income? It's I think you have to build up quite a sizable pot to achieve this goal, but it is possible. That's why they said that the best time to start was yesterday, the best time to start afterwards is now. So no matter how much money you've got, guys, just go and buy a few stocks, test the waters, and you'll start receiving the dividends and growth and build your confidence up. As it says there, living off dividends is a marathon, not a sprint. You can't just expect, unless you have a really sizable amount of cash to invest with straight away, then you're not going to be living off your dividends for a while. So it says dividend investors like planting seeds. You put your money to work and watch them grow over the years, and then plant more seeds with your dividends you receive to help it grow. As it says there, to live off $100,000 a year, you need a 3.3 million portfolio, which a lot of people won't reach. You have to be a realist as well. Like, I think some people could live off £20,000 a year or 30, which in that case you'd probably need a couple of $100,000 in your dividend portfolio. And the next point, it says the key to living off dividends is to focus on dividend growth stocks. I agree with that. Dividend growth stocks are the best way to go. I think you can invest in already good, well established dividend companies, but the dividend growth ones are the ones that will help you get more money off your dividends. Each time it comes round, the year comes round, they'll increase it. And I think that's what the key is. There we go. The next part of the article is how to build a dividend portfolio for regular income. It says you suggest using a brokerage that offers low commissions, i.e. Robinhood, and obviously free trade in the UK. Investing has never been easier to do, guys, so I suggest getting on to them 2 apps particularly. There's also M1 Finance, trading 2-on-2, all sorts of apps. So the next part is the dividend portfolio allocation. So where should you be putting your money? I agree with a lot of this as well. It's what it says. Obviously mine will probably vary and yours will probably vary as well, but you should have some of your portfolio to dividend kings, which are companies that have increased in dividends for 50 years or more, such as Johnson & Johnson, companies like that, big massive companies. Then 35% of your portfolio to aristocrats, which have been growing, companies who have been increasing the dividends for 25 years and more. And then 30% of your portfolio should be allocated to up-and-coming dividend stocks who've had a good track record in recent years of increasing the dividends to reward the shareholders, which are not considered classic dividend growth stocks like kings or aristocrats. So they're the ones you've really got to do your research on, guys. Obviously the dividend kings and aristocrats, everybody knows about them, so you really got to do your research and get into find stocks who you think are going to be on the rise in the future. And it says the remaining of your assets allocation should be in international dividend growth stocks. You could either find blue chip dividend companies At the end of the day, it says you should have a robust list of 25 to 30 stocks in your portfolio for long term. I currently hold 24, I think, 24, 25, not too sure on the exact number. It says once you have invested in your dividend portfolio, you can receive any dividends, reinvest them straight back into portfolio. That's when you've got a small portfolio, guys. You can't really, there's no point in taking 20, 30, 40 pounds out. You might as well keep it in there, buy more stocks and get the compounded interest moving further forward. But guys, everyone should be dividend investing, I feel. It's a really good, even if you're only earning 20, 30 pounds in dividends a month, that is absolutely fantastic. It's basically money you're getting paid to do nothing apart from invest your money in companies. It's a really great article, guys. I will link this in the description below. What you should be doing for a long-term, investing in long-term dividend stocks. You have to obviously do your own research the companies, have a look at the balance sheet, see how good they do on a year, the market cap, and how much the assets they have and liabilities. Obviously, you're not going to know everything about a company, but if you do your research, there's enough resources online to find that. Another interesting part of this article: 5 steps to invest for passive income. Contribute £200 per month, which some people might be a lot, but anything you can, get started, buy some stocks. Also increase your contributions if you earn more income per se. Also, they're given any dividend income you receive should be reinvested. But that, obviously, as I mentioned before, it does help the compounding. Invest in quality stocks, which are able to achieve 6% growth in your equity value. There you go. Repeat steps 1 to 4, and it'll go over again. As I said, guys, in the bank you get 1-2% interest a year, which is absolutely a pathetic return. But in the stock market, it's been known the S&P 500 averages a 7 to 10% return a year. Although that's different, that's a basket of stocks. This is individual stocks. If you invest in stocks that are within the S&P 500's top ones, that won't go far wrong, guys. So yeah, guys, let me know what you think about dividend investing. And if you haven't started yet, and if this video inspires you to start, let me know in the comments. So yeah, guys, that's it for today's video. Don't forget to subscribe and like this video. All the best. Bye.